Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 408 on January the 2nd, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SELLAS Life Sciences Group, Intuitive Machines, Inc., Rivian Automotive, and Hecla Mining Corporation. And we discussed three new trades on Tilray Brands, Ondas Holdings, Rigetti Computing, and D-Wave Quantum, Inc. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them or visit the YouTube channel for the Weekly Option. Now, both major equity indexes finished the week slightly lower. The Dow Jones Industrial Average lost 328 points, closing at 48,382 points. The S&P 500 index lost 71 points, ending the week at 6,858 points. And now it's time for the topic of the week. The topic of the week is achieving your goals in 2026. So how will you go about achieving your goals next year? I mean this year in 2026. It's hard to believe that another year has passed while a new year has come in. At this time of the year, you get to decide what you'll do to make this year better than last. I'm obviously a big fan of setting goals. I'm also a big fan of breaking those goals down into smaller pieces so that you can make them easier and more likely to achieve. Having one large goal over the next month without any instruction is way harder than having one goal, smaller goal per day that ultimately achieves the 30-day goal that you want. So break your goals down into smaller pieces. Now, one thing that is important to remember is that we don't control outcomes. I can do everything right and not receive the outcome that I want due to other factors outside of my control. All I control is whether or not I take the actions, and if I take the actions and I don't get the outcome that I wanted, I can always adjust my plan and try a different set of actions next month. Of course, I will also hopefully get better at taking the actions for next month. So you always want to be improving as well. Now, these are just a couple things that I'm keeping in mind for making 2026 my best year yet. So make your goals, break them down into smaller steps, and then remember that we don't control outcomes, only actions. Take the actions that lead to your goals and let the cards fall where they may. So that's it for the topic of the week. Let's get into the review of last week's trades. We're going to start off with our covered call. We looked at SELLAS Life Sciences Group, symbol S as in Sierra, L as in Lima, S as in Sierra. At the time, the stock was trading for $2.86 per share. I looked at buying stock and selling the January 3 call at 35 cents. That could give us a return of 17.13% in 3 weeks. Now, shares of SLS grew $1.47, ending the week at $4.33 per share. The call option that we sold gained $1.20, leaving us with a net profit of 27 cents if we were to close the trade out immediately. Now, holding this position through expiration or until the stock gets assigned would lead to an extra 22 cents of profit and lock in that 17% return on capital that we originally planned for. So this trade is clearly working out as planned. No adjustments are needed. It's just a matter of waiting for time to expire. Next up, we have our cash secured put on Intuitive Machines, Inc., symbol L as in Lima, U as in uniform, N as in November, R as in Romeo. At the time, the stock was trading for $15.24 per share. I looked at selling the January 15 put at $1.20. That could give us a return of 8% in 3 weeks. Well, shares of Intuitive Machines gained $2.63 per share, ending the week at $17.87 per share. The put option that we sold lost 48 cents, which would allow us to lock in that profit if we were to close the trade out immediately by buying the put option back. Now, with stock going higher, I'm more interested in holding this put a little longer and allowing it to continue to lose value over time. The stock is more than $4 per share above the break-even price, so there's no need to make any adjustments on this trade at all at this point. It's working out as planned, so let it be. Next up, we have the credit spread on Rivian Automotive, symbol R as in Romeo, I as in India, V as in Victor, N as in November. At the time, the stock was trading for $20.90 per share. I looked at selling the January 20 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now, shares of Rivian fell $1.49, ending the week at $19.41 per share. The out-of-the-money put spread that we sold is now in the money, and the stock price is below our break-even point, all of which leads me to be open to making an adjustment at this point. Now, my main goal, remember, is to limit the risk of loss, not increase the loss. I could sell the 20.5 call spread at 15 cents. That would mean that I sold the box at 32 cents, which would lock in an immediate 18-cent loss overall on the trade. Now, that is more appealing than possibly losing 33 cents on the trade. Now, I will not bring in much money by selling a higher strike spread, like a higher strike call spread. As well, there are only 2 weeks left on this trade, so anything can happen. I will ultimately want to limit the loss on this trade, but I don't have to run off to make an adjustment right now. You can even buy the spread back and roll the risk to next month by selling another put spread in February. Either way, this trade is in the danger zone, and you should be ready to adjust this trade, especially if the stock price does continue lower. So just have a couple of options, whether it's selling the call spread and higher strike call spread that allows you to create the iron condor, or it's selling the same strike call spread, which creates a box, or maybe you decide to roll the put spread to another month, the short put spread to another month. Whatever you decide, just do the math, make sure you understand the risk before you put the trade on, and move forward. And our final trade from last week was a debit spread on Hecla Mining Corporation, symbol H as in hotel, L as in Lima. At the time, the stock was trading for $20.20 per share. I looked at buying the January 20 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 3 weeks. Now, shares of HL lost $1.33, ending the week at $18.87 per share. The in-the-money call spread that we bought is now out of the money, and the stock price is nearly $1 below our break-even point, which means this trade is also losing money. Now, the one matter that brings me hope in this trade is the way the stock prices have made a strong move higher on each of the major pullbacks in price more recently. So if you adjust now and the stock price pushes higher, you will lock in a loss. I don't panic if a spread trade goes against me initially because the maximum gain and loss were established right at the start of the trade. This helps me to be a little more patient when the trade moves against me. For now, on this trade, I'm going to give it a few more days just to see if we're going to catch another rally in the stock, just like we've seen in the last few weeks or the last few times it's done this. So hopefully the pattern continues over the next 2 weeks and we're able to exit this trade at maximum profit when the stock goes back through our short strike and finishes in the money. So that's it for the review of last week's trades. Obviously, there's going to be a little bit of patience on the last 2 trades, but the first 2 were definite winners so far. It's always important to keep track of those throughout the lifespan of the trade because you never know what's going to happen. Anything can happen as the stock market moves, so you want to stay abreast of whatever is going on. All right, so we're only 2 weeks away from January expiration on January the 16th. All new trades on today's show are inherently more risky due to the limited amount of time that's remaining in order to be able to make an adjustment. So that all being said, I'll show you what I'm looking at this week. We're going to start off with the covered call. I'm looking back at Tilray Brands, symbol T as in Tango, L as in Lima, R as in Romeo, Y as in Yankee. The stock ended the week at $9.71 per share. I'm looking at buying that stock and selling the January 10 call at 77 cents. That could give us a return of 10.92% in 2 weeks. Now you enter this trade by buying stock for $9.71 per share and selling the January 10 call at 77 cents. This trade makes the most money if stock prices finish above $10 per share. The break-even price on this trade is $8.94 per share. In real terms, the stock purchase would require $971, and you'll collect $77 for selling the option. Next up, we have the cash secured put. I'm looking at Ondas Holdings, symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. The stock ended the week at $11.04 per share. I'm looking at selling the January 11 put at 97 cents, hoping for a return of 8.82% in 2 weeks. Now you enter this trade by selling the January 11 put at 97 cents. This trade makes the most money if stock prices finish above $11 per share. The break-even price on this trade is $10.03 per share. In real terms, you'll collect $97 for selling the put option, and you'll have $1,104 locked up just in case you need to purchase the stock. Next, we have a credit spread on Rigetti Computing, symbol R as in Romeo, G as in Golf, T as in Tango, I as in India. Stock ended the week at $23.62 per share. I'm looking at selling the January 23 put spread at 16 cents. That can give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the January 23 put at $1.52 and concurrently buying the January 23 put for $1.36. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $23.50 per share. The break-even price on this trade is $23.34 per share. In real terms, you'll collect $16 per spread that you sell, and you'll have $34 at risk. And then our final trade for tonight's show is going to be a debit spread. I'm looking at D-Wave Quantum Inc., symbol Q as in Quebec, B as in Bravo, T as in Tango, S as in Sierra. The stock ended the week at $28.13 per share. I'm looking at buying the January 27.5/28 call spread for 32 cents. That can give us a maximum gain of 18 cents, or that's a 56.25% return in 2 weeks. Now you enter this trade by buying the January 27.5 call for $2.53 and concurrently selling the January 28 call at $2.21. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $28 per share. The break-even price on this trade is $27.82 per share. In real terms, you'll pay $18 to enter the spread, and your maximum gain is $32 per spread. So that's it for this week's show. Thank you guys so much for listening. Lots of news happening in the new year. Lots that I can't wait to share with you guys. So super excited. Looking forward to sharing here in the next week or so. And I hope you have a wonderful weekend. I hope you've had wonderful holidays, no matter which ones you celebrate. And hey, just let's start this year out strong, all right? We finished last year strong. Let's start this one strong, all right? So have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.